Hey everyone, it's Wednesday morning, February 26th, and welcome back to Capital Markets Quickie. I'm your host, Endrit Sella, here to break down yesterday's market action in just 2 minutes. Before we get started, a quick note. Today's episode is sponsored by AMF Capital Asset Management Frankfurt. For tailored investment solutions and top-quality mutual funds, visit amf-capital.de. Well, the markets just can't catch a break, can they? Stocks were all over the place yesterday, as tariff fears, weak economic data, and a big crypto sell-off sent shockwaves through Wall Street. So, here's what happened. The Standard & Poor's 500 fell about 0.4%, while the Nasdaq Composite took a much bigger hit, down 1.3%, dragged lower by some of the Magnificent Seven names like Nvidia and Tesla. The Dow Jones, though, it actually managed to close in the green, up 0.4% after some last-minute buying. The big worry? Consumer confidence fell off a cliff, marking the biggest monthly drop in almost 4 years. Inflation fears are creeping back and recession talk is heating up again. Not exactly the news investors were hoping for, but the real chaos came from crypto. Bitcoin dropped below $90,000 for the first time since November, touching a low near $86,000 before bouncing back a bit. Ethereum wasn't spared either, losing about 6%. That dragged down crypto stocks, with Coinbase and MicroStrategy under pressure all day. And then, of course, there's Trump's trade moves. His latest comments suggest the tariffs on Mexico and Canada will roll out next week, and now there's talk of even tougher chip restrictions on China. That's put Nvidia right in the spotlight ahead of its earnings today. Investors are asking, can AI demand keep driving the stock higher, or is it finally time for a pullback? Oh, and let's not forget Tesla. Shares tanked more than 8% after data showed European sales collapsed 45% in January. That's not exactly a confidence booster for the EV giant. So what's next? Nvidia's earnings are the main event today, and the 10-year Treasury yield dropping to 4.3% signals that traders are already betting on rate cuts. But will the Federal Reserve follow through? We'll see. That's all for today's Capital Markets Quickie. Be sure to tune in tomorrow for all the post-earnings action. See you then.